Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, March the 7th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can then input into your portfolios in your own way. But having said that, everything that I talk about in these market commentaries, I can't give you a recommendation because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on with some economic data. Pretty light this week across the pond, but here in the United States, we did have Bostic speaking. He is an FOMC member. A lot of FOMC members speaking today because we are getting into that crunch time where they are going to have to go dark or quiet. They can't speak before like 2 weeks before the FOMC meeting. So I think that a lot of them are trying to get it all out before they go and have to stop talking about interest rates and things of that nature ahead of that meeting. Anyway, so then we had the ADP non-farm payroll unemployment change. Remember, this comes out usually just before the non-farm payroll, which is the more widely looked at one. But ADP does give you sometimes a glimpse into what that non-farm payroll will do. It's pretty random, though. On the floor, we never really looked at it that much and waited for the non-farm payroll. We didn't really trade on the ADP number. But having said that, ADP did come out with 235,000 hires, expected to be 199,000, and then they revised last month's number up from 134,000 to 144,000. So looking pretty good on the employment front. And then Dudley speaking probably right about now, might be just finishing up. And then also we had the overnight rate for Canada remained unchanged. Crude oil inventories came in line with expectations at 2.4 million barrels, expected to be 2.6 million barrels. And then later on today, we have Beige Book. Now, it's not really widely looked at by the street, but I actually really look at this economic data point quite a bit because the Beige Book is very similar to what the FOMC is going to be looking at. They get a couple of non-published books that are like the Blue Book and some other color, but we get the Beige Book, and it is a close representation of what they are going to be seeing. So I think it's a good data point to really look at. All right, on to the overall markets. We've got crude oil coming off a little bit, just slightly, 60 some odd cents. Earlier today, after this number came out for the crude oil inventories, we rallied up and it was trading right around, $62. It was in the $62 handle, and it was looking like we had two counter-opposing dojis, which would be a continuing pattern going up. Now, if we finish down here near the lows, it's going to look like a topping pattern. So you're going to have to wait till the end of the day to really discern whether or not it looks like it's a continuation pattern or confirmation to the downside. I'm not making any plays on that right now. I'm going to end up waiting for that. Wait for this to kind of sort out just a little bit. On to gold futures, almost retracing all of that big rally we had yesterday. As you can see, it is almost at this point an engulfing pattern. Overall equities started out pretty low today, which gave gold a little push to the upside, but now we're seeing the equities rally, and that's causing gold futures to come off a little bit. A couple of things of note, not really seeing a whole lot of inflation. We're also seeing economic slowdown. Not really, I can't really say a slowdown, but it feels like the European region is starting to slow down a little bit on the economic data points. And I think that was causing a little bit of push to the upside. But now with the equities moving higher, we're seeing gold kind of sell off here. Then on to Bitcoin futures, back below 10,000. This is a big sell-off today, down 785 points. Yesterday, we kind of got stuck right there at that point of control. But today, what's happening is there's some news coming out, and it's not real solid right now, but I'm just giving you a heads up that basically I'm seeing out on the social media, Twitterverse or other places, that there are reports that Binance is or has been hacked, and people are reporting their wallets are emptied, and the market sold into Vicon. So they are disabling all withdrawals from Binance. So that, though, with those hacked fears, really causing Bitcoin to come off. One of the problems with blockchain is there is no ledger as to where that goes. It just shows up somewhere else, and there's no real way to trace it. So that's one of the downstrokes with the cryptocurrency. There's just no ledger there. All right, on to the other markets. VIX coming off again today. We were up into the 20s, or at least looking to test that earlier today. That's when we opened up much lower. It was almost like a gap down on the open, it felt like. But as you can see here, we're down 230 some odd points, but well off the lows. The market did open up and started precipitously selling off, but you can see that little distance there between the close yesterday, the open today. Quite a bit of a distance there from the overnight session. And again, if we rally up towards the highs of the day, even though it's a negative print, those counterposing dojis, especially if we're right at the highs, could look like a continuation pattern staying within this trend channel here. Similar situation with the NASDAQ. This very well could look like a topping pattern, or depending on how we settle, like it is a confirmation. So all of these chart setups are really kind of dependent on the closing print for the most part, and where the volume's been trading and how that volume really affects. If we see a lot of volume coming into the end of the day to the upside, I would say that's a continuation pattern. If we see a lot of volume to the downside, then that's confirmation to a bit of a top here. So keep all of those things in line. I have my volume down here and everything else, keeping an eye on that stuff. All right, E-mini S&Ps. You can see this is what I was talking about from yesterday's session. The overnight session gapped down below the 200 SMA, so simple moving average. This being said, we got a little bit short overnight inventory, and then as you can see, the coming into the day session, basically as soon as the market opened, we did trade down just slightly, but then off to the races to the upside, printing inside of yesterday's value area. So tested that and have started sloughing off just a little bit, but we are there where the most time has been spent. All right, on to a few things that I'm looking to do with Honeywell, HON. If you remember, I put this on quite a bit ago. I'm looking to try and get out of this trade. The reason why is I'm well over 50% of my max profit. Another thing that I'm looking at, you guys, to be quite honest, and a lot of you guys will have never heard this before, but I am actually looking at taking a vacation. So having said that, I'm looking to try and cover a little some of my positions just so that I don't have a lot of naked strategies on while I'm on vacation. I might be starting to add a few other strategies throughout, but they are about the next week, because I'm looking to take off Friday and through Wednesday, but I'm going to maybe put on a couple of defined risk strategies for that. All right, but back again to Honeywell. If you guys remember, it was basically just on the 2nd of March where I ended up doing these. 2nd of March would have pulled in right around here when we started getting this big sell-off in the confirmation. When we got the confirmation, the next day is when I put those on. And I went in and sold the March 155 calls for 38 cents, and I'm looking to try and buy it back for about 10 cents just to have a working order. Today we're moving down lower, so I'm just letting that theta decay happen. There's only 9 days left in this strategy, so that theta decay is really going to start picking up. So looking to get out of that in my margin account and in my IRA. Now remember, in my IRA, I have a bit more of a defined risk strategy, right? It's synthetically built out like a naked short call, as in I sold the 155 calls and then defined that risk by buying the 162.5 calls. Now that's just because it's illegal to have naked calls in your margin account, or in your IRA, I should say. So therefore, my rule of thumb is go out and buy the first call you can for a nickel. That's not the defined risk strategy that we're looking for. We're not going to be willing to take that much risk, but it's just to kind of get around the red tape and be able to kind of synthetically create a naked strategy in your IRA. So that's with Honeywell, ticker symbol HON. And then another strategy or another stock I'm looking to try and get out of is in SBUX. And with SBUX, another similar situation. I just recently put these on and, got the directional move. So in SBUX, I'm looking at getting out of my March 58.5 calls that I sold for 38 cents. Again, I'm working about a 12 cent bid in there. So hopefully, I need a little bit more of a pullback here because SBUX is pushing higher after the open. It's still lower than yesterday's close, which is good. Still haven't met my objective on that. And if you remember in SBUX over in my IRA, I also sold the 58.5 calls and then bought the 61 calls to define that risk. Just trying to get out of the short strategies. Like in my IRA, I always leave on those long defined risk aspect of those strategies because I put them on for a nickel. By the time I take them off, if I'm directionally right, they're worth nothing. So it doesn't make sense to take them off for $2 when it's going to cost me that $2 to get out of it in a sense, or at least for the commissions. So looking to get out of SBUX. Netflix I did get out of. You can see we got a nice move in Netflix here. I don't have Netflix on in my IRA. So this is just a trade that I have done in my margin account. And with Netflix, if you guys remember, it was back on the 28th that I did these, where's the 28th on here? Right there. So the 28th is when I put this strategy on for Netflix, and I went in there and sold the March 265 puts in there for $1.29. Now remember, this was right after the Oscars, and I was like, hey, Netflix must be doing pretty well with the Oscars. They're starting to get a little bit of a bump here, and decided to go in there and trade that in that strategy, those March 265, yeah, that's right, 265 puts I sold in there for $1.15 in there for those 265 puts, and then I bought them back today for 27 cents. Sorry about the confusion there, but got the directional move. Volatility wasn't helping me on this big move the last couple of days, but the direction superseded that volatility increase, which was ever so slightly anyway, so was able to get out of those for a nice profit because of that massive directional move. All right, that's about it for today. Looking to cover, like I said, the SBUX and the Honeywell. Haven't added anything to my portfolio yet, but if I do, I'm going to be doing defined risk strategies because I don't want to be messing around with that so much when I am on the mountain snowboarding. But I will be trying to do a couple of daily market commentaries here and there just to keep you guys apprised as to what I'm doing. I'm going to be bringing a computer on the road with me and shooting and trading from the road. So check that out. And Friday's webinar is going to be on the long straddle. All right. So that is a great way for an outpaced move when we have low implied volatility, when you expect something big to happen, especially when something's trading in a very tight range, similar to what we've seen, something along the lines of here, if you wanted to do that. And then you get that big outpaced move. It is kind of taking advantage of that in that eye, but we could find situations where we had low implied volatility and you get that expansion. I'm going to talk about all those rules in Friday's webinar, so check that out. Go to protraderstrategies.com, and if you can't take that, take it easy.